Welcome back to the channel. Today, we're diving into 5 high-return investment ideas that you can start today with low capital. You don't need a trust fund or a fat inheritance to get started with investing. In fact, you can start building real wealth with just a few bucks and some smart choices. So let's get right into it and explore these opportunities. So you're probably thinking, Esteban, how can I possibly earn high returns when I'm just starting out? It seems daunting, right? The world of finance can be intimidating, especially when you're new to investing. But don't worry, there's a way to dip your toes into the investment pool without feeling overwhelmed. Well, my friend, let me introduce you to the world of peer-to-peer lending. This is a relatively new and innovative way to invest your money, and it can be quite rewarding if done correctly. Imagine being able to lend money directly to people or small businesses without the need for a traditional bank. Sounds interesting, doesn't it? Platforms like Lending Club and Prosper cut out the big banks and connect you directly with borrowers. These platforms have revolutionized the way people think about lending and borrowing money. By using these services, you can become a mini bank yourself, deciding who gets a loan and under what terms. You can loan small amounts of money, even as little as $25, to individuals or small businesses looking for loans. This means you don't need a large sum of money to get started. You can begin with a modest amount and gradually increase your investments as you become more comfortable with the process. These borrowers could be looking for anything from debt consolidation to funding a new business venture. The variety of loan purposes means you can choose to support causes that resonate with you. Whether it's helping someone get out of debt or supporting a budding entrepreneur, your money can make a real difference. And the best part, you get to decide who you lend to and what interest rate you want to charge. This level of control is empowering. You can review the borrower's profile, their credit history, and their loan purpose before making a decision. It's like being your own loan officer. Of course, there's always risk involved with any investment, and peer-to-peer lending is no exception. It's important to understand that not all loans will be repaid. Some borrowers may default, which means they fail to pay back the loan. This is why it's crucial to be cautious and strategic. Borrowers may default on their loans, so it's important to diversify your investments and not put all your eggs in one basket. Diversification is key to managing risk. By spreading your investments across multiple loans, you reduce the impact of any single default. Think of it as creating a safety net for your investments. But with careful research and a little bit of luck, you can potentially earn significantly higher returns than you would with a traditional savings account. Research is your best friend in this journey. By analyzing borrower profiles and understanding market trends, you can make informed decisions that maximize your returns. I've seen returns of 8% or more with peer-to-peer lending, which is pretty incredible compared to the measly interest rates offered by most banks. Imagine earning 8% on your investments while your savings account barely gives you 1%. It's a game changer, and it opens up new possibilities for growing your wealth. Now, you might be wondering how to get started. The first step is to choose a reputable peer-to-peer lending platform. Do your research and read reviews to find a platform that suits your needs. Once you've selected a platform, create an account and start exploring the available loan listings. When you find a loan that interests you, take the time to read through the borrower's profile and loan details. Look at their credit score, employment history, and the purpose of the loan. This information will help you assess the risk and make an informed decision. Once you're satisfied with your choice, you can invest in the loan with just a few clicks. It's that simple. Over time, as the borrower makes payments, you'll receive your share of the principal and interest. You can reinvest these earnings into new loans, further growing your investment portfolio. Peer-to-peer lending is not just about earning money, it's also about being part of a community. You're helping people achieve their financial goals while growing your own wealth. It's a win-win situation that benefits everyone involved. So if you're ready to take control of your financial future and explore new investment opportunities, give peer-to-peer lending a try. With careful planning and a bit of patience, you can achieve impressive returns and make a positive impact on others' lives. Happy investing. Now, let's talk about another powerful investment strategy. Dividend stocks. Imagine this. You own a piece of a company, and that company pays you just for being a shareholder. That's the beauty of dividends. When you invest in dividend stocks, you're essentially buying a share of the company's profits. These companies distribute a portion of their earnings to shareholders on a regular basis, typically quarterly. Think of it like getting paid to own. Now, not all companies pay dividends. Typically, well-established, profitable companies in industries like consumer staples, utilities, and healthcare are more likely to pay dividends. But when you find those dividend-paying machines, they can provide you with a steady stream of passive income. And the best part is, you can reinvest those dividends to buy more shares and accelerate your wealth-building journey. It's like a snowball effect. Chapter 3. Real Estate Crowdfunding. Become a real estate mogul without buying property. Okay, let's be real for a second. The idea of becoming a real estate mogul might seem like a distant dream for many of us. Investing in real estate can seem daunting, right? The sheer amount of money involved, the complexities of the market, and the fear of making a wrong move can be overwhelming. I mean, the down payments alone can be enough to make your head spin, not to mention the ongoing costs of maintenance, property taxes, and unexpected repairs. But what if I told you there's a way to invest in real estate with as little as $500? Enter real estate crowdfunding. This innovative approach allows you to become a part owner of lucrative properties without the need for a massive upfront investment. Platforms like Fundrise and Realty Mogul have completely revolutionized the real estate investing game. These platforms make it easy for everyday investors to get involved in real estate by pooling their money together. They pool money from investors like you and me to invest in large-scale real estate projects, such as apartment buildings, commercial properties, and even renewable energy projects. This means you can be part of something big without having to go it alone. You get to diversify your portfolio across multiple properties and geographic locations, all while enjoying the potential for passive income and appreciation. Diversification is key in any investment strategy, and real estate crowdfunding makes it accessible. Plus, you don't have to deal with the headaches of being a landlord, like fixing toilets or chasing down rent payments. It's a win-win. Imagine earning money from real estate without the stress of property management. You can sit back, relax, and watch your investment grow. Real estate crowdfunding also offers a sense of community. You're not just investing alone. You're part of a group of like-minded individuals who are all working towards the same goal. This can provide a sense of security and shared purpose. And let's not forget the potential for financial growth. With the right investments, you can see significant returns over time. Real estate has historically been a strong performer, and crowdfunding allows you to tap into that potential. So, if you've ever dreamed of becoming a real estate mogul, but thought it was out of reach, think again. Real estate crowdfunding is making it possible for more people than ever to get involved in the market. It's an exciting time to be an investor. Take the leap, explore the platforms, and start your journey towards becoming a real estate mogul today. The world of real estate is waiting for you, and with crowdfunding, the barriers to entry have never been lower. Happy investing. Chapter 4. High-yield savings accounts, safety first, return second. Alright, I get it. Not everyone is comfortable with the risks associated with stocks or real estate, and that's perfectly okay. Investing can be intimidating, especially when you hear stories of people losing their life savings in a market crash or a bad real estate deal. The fear of the unknown can be paralyzing, and it's completely natural to want to avoid that kind of stress. If you're looking for a safe and accessible way to earn a higher return on your money, high-yield savings accounts are your best friend. These accounts are designed to offer you a better interest rate than your standard savings account, without exposing you to the volatility of the stock market or the complexities of real estate investments. These accounts are FDIC insured, just like traditional savings accounts. So your money is protected up to $250,000 per depositor per insured bank. This means that even if the bank were to fail, your money would still be safe. It's a level of security that can give you peace of mind, knowing that your hard-earned cash is protected. But here's the kicker. High-yield savings accounts offer significantly higher interest rates than those offered by brick-and-mortar banks. While your traditional savings account might offer a paltry 0.01% interest rate, high-yield savings accounts can offer rates that are 10 to 20 times higher. This means that your money can grow at a much faster rate, even if you're not taking on any additional risk. We're talking about 10 to 20 times higher. Imagine the difference that can make over the course of a year. Instead of earning just a few dollars in interest, you could be earning significantly more, all without having to worry about the ups and downs of the stock market. Now, I know what you're thinking. Graham, those interest rates are still pretty low, and you're right. Even the best high-yield savings accounts won't make you rich overnight, but that's not the point. The goal here is to make your money work harder for you, even if the gains are modest. But the point here is to beat the measly interest rates offered by traditional savings accounts. When you compare the two, it's clear that high-yield savings accounts offer a much better return on your money. It's about making the most of what you have and ensuring that your savings are growing as much as possible. With a high-yield savings account, your money is working harder for you, even if it's not earning you a fortune overnight. It's a way to ensure that your savings are growing steadily without taking on unnecessary risk. Over time, those small gains can add up, helping you to reach your financial goals faster. It's all about making your money work for you, no matter how small the gains may seem. Every little bit helps, and by choosing a high-yield savings account, you're taking a smart step towards financial security. So, if you're looking for a safe and reliable way to grow your savings, consider opening a high-yield savings account today. Your future self will thank you. Chapter 5. Robo-Advisors. Investing on autopilot. Let's face it, managing your own investments can be time-consuming and confusing, especially if you're not a financial expert. That's where robo-advisors come in to save the day. Robo-advisors like Betterment and Wealthfront use algorithms to build and manage a diversified investment portfolio for you based on your risk tolerance, time horizon, and financial goals. They take the guesswork out of investing and automate the entire process, so you can sit back, relax, and watch your money grow. And the best part? Robo-advisors typically charge much lower fees than traditional financial advisors. We're talking about a fraction of the cost. So, if you're looking for a hands-off approach to investing without breaking the bank, robo-advisors are definitely worth checking out. They're like having a personal financial advisor in your pocket, minus the hefty fees. Start investing today. And there you have it. 5 high-return investment ideas that you can start today with low capital. Remember, the key to successful investing is to start early, stay consistent, and diversify your portfolio. Don't let fear or lack of knowledge hold you back from building real wealth. If you found this video helpful, make sure to give it a thumbs up and subscribe for more financial tips and investment strategies. See you in the next video.